Welcome back to another video. So Academics. Today we're gonna be teaching my wife how to trade options, and we're gonna make her some bread. So y'all stay tuned to the video. We're gonna see how this goes. She's gonna ask questions. Yeah, let's get into the video. Make sure y'all like, comment, subscribe. Let's get straight into it. First thing you need to know, whenever it comes to option, is what is option. The option gives you the right to buy or sell a stock at a specific price. So there's two types of options whenever we trade. You got a call, which is the buyer expects the price to rise, and then the put, which the buyer expects the price to fall. And based on these two strategies, you want to time them in order for you to profit. If the price doesn't fall with a put, then you don't make money. If the price doesn't rise with the call, then you don't make money. You lose your whole investment.
So is a call and a put like a bull and a bear?
Exactly. A call and a put is like a bull and a bear in the market. And the bull is expecting the price to rise, and the bear is expecting the price to fall. So as we see in this picture right here, this is GME. You know, remember GameStop? What happened in 2020 with Rowan Kitty?
Yeah, everybody got rich.
Yeah, a lot of people got rich off that. So they did options. A lot of people play options on this. That's what really make the wave go crazy. So we see a call right here on the left, and you can buy a call. Make sure you put the you're on Robinhood, you put the section on buy. Unless you already own the contract, you can go to sell if you already own the contract, but most likely you want to buy it, and then this is how you buy a call. And the top is right here, the out the money contracts. What out the money is basically is it's above the strike price or the price of the market. So GameStop right now is at $27 right now. Above out the money is right here $60, $50. So basically anything above $27, right? And in the money is something that's in between where the current price of GameStop is, which is $27. So as we go down, we start to see more in the money. Anything below $27 or at $27 is considered in the money, just because remember you want to profit buying low and selling high. So anything below 27 is considered in the money for you to start profiting or for the contract to go up. And out the money is considered more risky. That's because it's out of
It's
that
already
range.
up, so like it's a lower chance of going up more.
Exactly. It's going to be harder for it to go up because it's already high. You already got a high strike price. So right here, a strike price is basically what the contract price is for that contract. So you see how it's a $55 call right here, and the market price is at $27. Well, this right here is going to be considered less expensive but more risky just because the market price is way lower than where the strike price is at. So you always want to aim for a strike price that's near where the market price is, depending on where you're thinking the price is going to go or project over time. So if you think GameStop is going to go over to $55 this week, then that's not a bad strategy for you. So it depends on your strategy. But if you want to profit faster, it's always good to get them in the money. That's why there's a line right here.
Oh, it tells you.
There's a line right here that shows you the in the money option. So anything below $27. Okay, so some key factors that you need to know about options is the strike price. Strike price right here is just telling you where the contract's price is going to be whenever you're buying the contract or whenever you're buying the option and expecting the price to either rise or fall. And you want to always make sure that the strike price is near the market price on where your strategy is. The market's at $27 right now. You want to make sure that the strike price is either at $27 or anything lower for you to get the best profit for a call option. And we see for a put, strike price is the same thing. They have the same number for the strike price. You see they got a $27 strike price. And for a put, for you to put the price down, you want to make sure that the price is high. So it's the opposite, because the bigger the fall, the better the profit. So if we fall down from $60 in GameStop and it's that high already, and we get it down to like $15, we done subtracted 65 minus 17, and that's
a good thing.
That's a good thing. So the bigger the difference for a put, then that's a bigger your profit. But for the call, it's the opposite. So we get the price for.
So a put, are you betting that it's going to go down?
Yeah, you're betting that the stock is going to crash and bet down. So you want the stock to be high as possible for you to get that.
To have a better chance that it's going to go down.
Exactly. And you see that GameStop is really pretty much already low. Like you see $65 strike price for GameStop is about $3,700. See, this is right here on the right is the price of the option, and the price is going to tell you how much the option is worth based off the premium. So if you click on it right here, it already calculates it for you. So it says 37.90. what I do is just multiply it times 100 because you get 100 shares every contract for an option. So if you own multiple options, you own like 10 options, you basically got 100 times 10, so 10,000 shares of that company. But you gotta have it at a certain date that expires. But that's the thing about option. We see at the top right here, it has an expiration date for every week that the option expires. So we can take a look at the 2-day. That this one expires in 2 days because we're already pretty much done with the week. This one expires in 10 days. And these are 10 market days, not 10 days counting the weekends. And this is May 2nd on 17 days is gonna expire. So, and you wanna know, as we take a look, the more we go down on this list, further out days, like the 24th, more days, the more bottom we go down, we're gonna see that the contracts for the in the money options are gonna be more expensive. Okay, that's because that these contracts for the calls are considered less risky than the ones that are closer in date. So if we go down to like 2026 for GameStop option, it's gonna be around 843. So that's gonna be $143 if we multiply that times 100. And Robinhood already does it for you. See, you get 100 shares each contract. You see how simple Robinhood keeps it for you for investors, and they teach you as well compared to other brokerages like Fidelity and TD Ameritrade. They expect you to know that, so they don't tell you that information. Like, it's all in type interface. They already put it in there. They don't give you the type of information like this. And this is the bid and ask. So the buyer is expecting you to get at least $825 for you to get this contract, or between $850 for you to buy this contract. So your order won't fill if it's not in between that range, or you can always get guaranteed fill if you buy it higher. So it's like a bid, basically like an auction. People want to sell the car for $3,000. Someone who pays more than $3,000, they're gonna guarantee to get that car. So that's the same thing with the option. There's people bidding for that option price. So if you get one option contract right here, then you can go ahead and get for $850, and then for the strike five of $25, and with a break even $33. Break even means basically the stock has to be at $33 by the time the expiration date hits by January 16, 2026, which is we see up here the expiration date. And if GameStop doesn't pass $33.38, then you will pretty much just lose your whole investment. But if it hits $33.38, you will keep your initial investment. So that's the thing with the break even. You'll break even with your investment. So you want to pay attention to that price as well whenever you're doing option strategies as well. And that's pretty much all you guys need to know. Make sure you always pay attention to how much the contract costs. And as you pay attention more to the stock price, always pay attention to how the stock price for the option costs. As more as the stock price starting to fluctuate, it's going to change. So we might see GameStop's premium right now be $838, but then the next few minutes, if GameStop starts to rise, then we start seeing this contract will be worth more. So it might be $900. It might start being worth $1,000. But the best time to get an option whenever the stock's low. And you guys will start noticing that once you start paying attention to the stock and how the option price correlates with the stock price. And then, as you know, the less risky strike price for you is the lowest one, which is $3. And the best combination for you is to get the lowest strike price, one that has like a further out expiration date, that has more time. That is the best combo for option investor. I mean, there's people on Reddit that get options that expire like in the next few days or even today, and then they go all the way, they get the strike price that's probably near the market price right now, and they multiply this times 100, right? So let me show y'all guys. This is I see a strategy I see a lot of people doing that's pretty risky when it comes to options, but if done right, you could make a good return. But I wouldn't play this option all the time or most of my account. So people buy like 100 contracts right here. So they type in 100 right here, and it's like a day trade or like a swing trade.
Quick
Little move. Because if you get 100 contracts or something, anything, if any direction and it's right, that's guaranteed to make you some good money, especially if the stock was volatile that day. Okay, so you're already getting 100 shares for one contract, and you're buying 100 contracts. All right, that's like some pure greed if you want to move it towards a direction, and that means you're pretty confident on the direction that the stock is going to go. So if you buy 100 calls for GameStop right here at $26.50. Okay, and for the price of 90 cents each, which is actually $90 each. If you multiply 0.90 times 100, that's $90. And you know, Robinhood's gonna tell you that. That's why whenever you get 100 contracts, it's gonna be $9,000. So 100 times 90 is 9,000. So if you got $9,000 to invest in GameStop right now, and we see that this 26.5 option starts to appreciate over time, by the end of the day, GameStop call option is worth by the end of the day about $150. So now you'd have made $60 off each contract that you made. That's pretty much a good return. So GameStop, our initial investment for GameStop with a 26.5 investment was 9,000, and now GameStop appreciated to $1.50 per contract that we have. So that's an investment of $15,000 that we have now, from $9,000 to $15,000. That's a $6,000 appreciation investment that we made. Now GameStop was back down, so if we didn't sell that once our profit was at 15,000, then the market is gonna fluctuate and go back down. Like we see now, the contract's back down to 86 cents. Now it's at 87. So it moves up and down like that based off where the stock price is at. That's why we pay attention to where the stock price is at, because it influences the strike price, the cost of the strike, or the option price. So we see that it's back down. If we had lost 6 cents per contract, this contract would be about 86. It would be about $8,600, because we lost $400 in total investment, and we're losing $100 every direction that it goes down or up. You'll lose 100 either way. If it goes down $1, then you lose 100. If it goes up $1, then you reach up $100. So everything is moving with more position size than stocks, because you got 100 shares, and that's just gonna involve more risk. So that's the thing about options. Any questions?
No, makes sense.
So let's give a live example. I see GameStop's currently at $26.85, and I want to put a long leap on GameStop because I'm not trying to trade GameStop right now. Let's just go with an option example where it's a leap. That means we got more time ahead for us to trade option, because that's my belief is less risky than someone that's day trading these options. But I will show you guys both a day trade and a long leap, just in case you have 80% of your portfolio long term and 20% to do some day trades. So let's go ahead and show you guys. This is GameStop's price, and this is the formation. Based off this candlestick formation pattern, I do see some bullish activity with GameStop with some good support around $21. So this is going to make me put a call option. If I'm thinking GameStop is going to rise, this was last year, right? Look, GameStop hit $65. Remember when that one time I hit off GameStop last year?
And what happened after that?
We went to the bank. We continue to see some bullish signs.
That.
That was that move right there. I caught that move right here from this.
What? You caught it from down there?
I caught it from down here. Actually, once it started breaking around $20, I started jumping in, and then I started putting some calls on that. And yeah, so you always want to time your entries real early. Like these people who would have got it down here. Nah, it's not gonna reach that. That's why I'm saying this support. Exactly, it's gonna stay strong around support. That's a great question, by the way, because price is not gonna fall and break support right here around this $20 range. Basically, support is whenever we see price bounce at a certain level and it's gonna go back up. So you see, whenever we see a support line, we're always gonna pay attention to where price touched there the most. So it touched there once, 2 times, 3 times, 4 times, 5 times, 6 times, and 7 times in the past. So GameStop is showing us that, okay, this is a key area where buyers like to step in and push a price after this huge bounce from last year. This is a real common price where GameStop tends to be. Even if we look even further back dates, 2023 and 2022, $20 is a common price for GameStop to be staying in. So whenever we see a range and a price stay there too long, it's either gonna break out or it might fall down out that range. And what I'm seeing GameStop is right now, since it is now involved in Bitcoin now, I'm seeing some bullish and divergence inside GameStop in the future. So let's go ahead and look at the call options. And I want to get in GameStop at least at $26, because like I said, guys, you want to get in low and you want to get in early before the bounce. And I'm thinking this move is going to happen this year, by the end of the year for sure. So just to be safe, I'm going to get an option that expires at least by January 15, 2027. And like I said, I want a strike price that's in the money already or in the same range of where GameStop's trading at right now. So as we see on Robinhood, it tells us that. So anything below that line is where we want to be buying that option. And this one right here is showing us with a strike price of $25, it's going to be $11.88 premium. Basically, the price of this option is going to be $1,188. If you multiply $11.88 times 100, you'll get that price. And you don't even have to do that math just because Robinhood does it for you, and it tells you all of this information as well. It's one of the perks about this user interface. We want to go ahead and add this one to our thing, and we're going to buy one contract of this. So we're going ahead and add this to our bucket, which is mean like check out whenever you go to Amazon. And the limit price, basically that number of price that you see that's on the right, you just type in that number, but your order may not fill if you're trying to go too lower than what they're asking for. Yeah, that limit price. So
you tired? You finally asleep? Look at your eyebrows. No. Don't get mean with me.
now let's take a look if GameStop went back down below $20 to see how the option will be affected. I'm gonna skip back down to 26. GameStop went below $20. Let's see how much our option is. See how it's already much going to zero. And the thing about options is cool. That is that if you do lose money, you don't lose more than your initial investment, unless you borrowed no margin or something. But yeah, that's the thing about options. If you invested $2,000, that's the max investment that you lose. If you invested $100,000 in the options, buying multiple contracts, that's the max you will lose. So that can be a blessing and a curse at the same time. Pay attention to how much you're investing into an option before you even place an option. Just because if you invested 100% of your portfolio in an option, it's a guarantee that you can lose that 100% or at least 50% of that real fast if you make that decision. Always go by that 80 by 20. If you got $10,000 invested in your portfolio, consider only risking $2,000 of that in options. Or you see stuff like this happen. You can lose $2,300 of your investment like that, which is 100%. So this is a good thing to pay attention to. If you notice every time that the stock goes up $1, the option starts to go up $100 if you got one contract. But since we got two, every dollar goes up, the option is going up $200. So that's just how options move related to the stock price. And you see this is the GME price that we see on the bottom. So every time GME price going up or down, that's going to affect the price of the option. So most thing that you should be paying attention to is the stock price, the GMB stock price, for whatever company that you're trading the option on. Always pay attention to that stock price because that's gonna influence the option price. The strike price is just getting you set to have that in the money or out the money contract, being able to buy it low or have a high price for you to put on, depending on the strategy. So always pay attention to stock price because this is the reason why you're making money or losing money. And that's a cool thing about Robinhood too as well. They explain this stuff to you because I'm telling you, Fidelity, TD Ameritrade does not break none of that for you down as a beginner investor. They want you to come already knowing this type of information. They don't want you to be doing this stuff if you don't know any information. Robinhood encourages people and teaches them if they want to start investing and doing options. They have the time to teach them with the UI interface and the way they have different information displayed on the screen. It's just simple compared to Fidelity. I was on Fidelity the other day and tried to put an option on and it didn't put my order in. I'm looking for where that order went and it's not an easy user interface to scroll around and show where my pending order is. I gotta go look for it and it's sitting in pending. I'm like, okay, I gotta cancel this since it didn't go through. So Robinhood is cool because if your order doesn't go in by the end of the day, it's showing you where that order is at, still in pending, right in the front of your home screen. So it's simple stuff like that. This makes Robinhood a better app for you to start beginning learning options. And I highly recommend y'all download and start using Robinhood to get started if you want to think about putting in 20% to invest in options to grow your long-term account. And that's just max. You don't have to put all 20% in.
I would say even start off risking 1% if you did go by investing 20% of your options. Don't lose more than 1% of your account, which is like $100. That way you got more runs to go than just going all in 20%, because that's all you got. And now once you're done with that 20%, you're gonna have to find a way to fund that. But yeah, this is a cool little thing that Robinhood has on their platform, and I continue using stuff like this to use my strategies to make good plays.
So once you hit that check mark on the price that you want, the option that you're selecting, the $25 range, you want to go ahead and go to the right and go enter the amount of contracts you want to buy. Beware that the price of the option is only one contract. So if you want multiple, you're going to have to multiply 1,188 times the number of contracts you want. In this example, we're just going to get one, and then we're just going to put a limit price of what they're asking for, which is $11.88. And that's not guaranteed to fill if someone doesn't want to give us that contract for that price. But if you always add more capital into it, you're guaranteed to get a price. So if we go above $11.88, we put in like $11.95. We are gonna get an order in for that. It depends on that how volatile for that day is. GameStop, whenever it's starting to trade high and people are like really buying GameStop, your order may not fill that day for real. That's why I say you gotta have this contract. They don't have to fill your order. You just don't get in that day. Your money's just gonna sit in that brokerage account. And that happens a lot of times with GameStop. Whenever it starts to pop off, or they start to pause trading activity, people too much volume and too much people buying and selling that stock. And this is why I tell people to always catch the move early and get in early, because the day that this thing squeezes or people are buying and selling this stock, you can't. It's gonna be hard for you to get your order in. Same thing with AMC. I've been halted from trading AMC as well too. And yeah, you're just gonna have to miss out on that rally for that day, unless a huge gap goes down. Sometimes the stock price even freezes, like it doesn't even move for a second. So that's why I like to do this, is get the option early and get out a long time ahead of time, just in case the move takes more time for it to hit. So this one's only gonna cost $1,190. It was not bad for this contract, because we're getting this one until January 15, 2027. So we're just gonna go ahead. That's a long time. So like, if you think about you having an asset, you pretty much want to have an asset that's a long time and it's gonna appreciate over time. That's how I think about it. So this is called a leap. Whenever you get an option contract over time and you have it on your side and it's appreciating over time, or you expect it to rise over time, these are option leaps. And these are like one of the best strategies for you to do with options, besides just weekly trading and swinging options for the daily. And yeah, this is a great option right here that I'm looking at, and we'll go ahead and get this one. Let me show you guys an example of my wife, how trading these options will work. This is an option strike price right here, a 24 call that has expiration on June 20th. And this right here is the total return so far for the day, down 51% for the two options. And this is the current price of the option, which is $568. While we see GameStop is down right now, my option is down, we can see GameStop option quickly rise around to be worth $1,000. I've seen it a bunch of times in the summer that the option could be low right now. This is a sign for you to get it, because once it's trading at 1,000, so between 1,000 to 2,000 per contract, then it's just gonna hard for you to get that order in. But you can still get your order filled, but you're just gonna have to pay higher than where we bought it at. So that's the thing about options. If the price is low, it's the same thing with the stock. If the stock is low that you buy it at, you get a better price. It's less risky compared to someone who bought it higher. That's why I went ahead and bought this option real early, just because I like how the price range is at. When I was buying the option, when GameStop was trading higher, it was about like 1,000 each to like 4,000 each. That's how much it was trading, because they got really expensive whenever the stock was trading high. So now we got it in about 500 to 1,000.
Faith in the Lord, I never move my mountain. As I sow, I shall reap. There's an outcome to our deeds. So I practice what I preach. Yeah, I'm covered in the spirit. From my head to my feet, what I want is not a need. She keep begging me to stay. Something's telling me to leave. I stole my love and make it count. I've been in the flood, but I never drowned it. Life is tough on a sinful bounty. Faith in the Lord, I never move a mountain.
Pray to the Lord, I drop to my knees. He is the way and He is the key. When I'm feeling low, I call out to Him. For God loved the world, 3:16. He is the way, the truth, and the life. Good versus evil, you gotta decipher. Put down the gun and get you a Bible. You got too much pride, you feel entitled. I started my